Hello, in today's video, we'll be taking a look at the Wednesday, April 1st, 2026 trading session for the CBOE SPX index. We'll be utilizing the day trading GPS, SPX daily key levels V 3.0 indicator, and we'll also be using a free ribbon indicator for confirming the entries. Okay, so in today's video, we're just going to be looking at a condensed video today. We're not going to go into every aspect of this indicator. If you would like to know more about how this indicator works and what all the features that are packed into this SPX Daily Key Levels V 3.0 indicator, please look in the description of this video for longer SPX session videos in which we go into the full details about the complete daily key levels trading strategy utilizing this indicator, as well as there's a link to a features video on the V 3.0 indicator for SPX, which will go over all the features and all of the inputs and all of the different indicator features for the SPX daily key levels V 3.0. Okay, so in today's session, we have a gap above. And we have on the 9:30 a.m. opening candle here, we have a close above the indicator's bull bear key price level. So this is the daily bull bear key price level that the indicator gives at the first tick of the 9:30 a.m. market open. And this is the important bull bear pivot for the session. The close above this candle represents a bullish entry signal on this 9:30 a.m. opening candle. However, we're not just going to go alone on that signal only. We're also going to look to our ribbon indicator for additional confirmation of this entry or to see if we get a conflicting signal. So we're going to turn on one of the two free ribbons on TradingView that you can use to help confirm entries. One is called Andy's ribbon. As you can see here, we have a fully green ribbon, and it is above these two thick moving average lines of the ribbon. And so along with our close above the bull bear key price level, that is confirming our bullish entry on this 9:30 a.m. Candle close. You can also take a look at the other ribbon here, the original Madrid ribbon. Doesn't have the two moving average thick lines like the Annie's ribbon, but again, we have a candle close above the bull bear key price level that is supplemented by a confirmation of the Madrid ribbon as well. The stop loss on this trade is going to be either the tight stop loss or the standard stop loss. The tight stop loss on this trade is the indicator's QL level below the level that you're taking the bullish trade from, in this case the bull bear KPL. So the tight stop loss is the QL level below the BBKPL. The standard stop loss is going to be the first midpoint level below the level you're taking the trade from, the bull bear KPL. So the first midpoint level below is this mid BBKPL S1. That is your standard stop loss. With this indicator, you can choose to either use these tight or standard stop loss. It's recommended to use the standard stop loss as it's less prone to getting stopped out. And we have found the standard stop loss to be the most consistent performer utilizing the daily key level strategy with this indicator. Also, you'll note we're on a 2-minute chart. That is also the most consistent time frame to use for the SPX using this daily key levels trading strategy for either 0 DTE or 1 DTE options for day trading them intra-session for the current SPX session. Now normally we go over 3 different option strikes that you can choose from with this strategy. There are 3 different option strikes that you can choose from on any bullish or bearish trade from any key level. In today's session, we're just going to look at the standard play only. But just know that with this indicator, if you look at our other longer session videos that are in the description, links to those are in the description of this video. You'll see that there are 3 different option strikes, one being the standard play, which is the at the money strike. That is closest to the price of the level that you're basing the trade on. The other two are out of the money strikes that are determined in the direction of the trade. The first out of the money strike would be the strike closest to this first midpoint above the level that we're taking the bullish trade from, and the furthest out of the money strike would be the strike closest to the full one level away in the direction of the trade from the level we're taking the trade from. So in today's session, the standard play that we're going to look at is the strike closest to the bull bear key price level. 65.60.18 is today's level. So that's going to be the 65.60 0 DTE call strike. If you prefer to use one DTE call strikes, you can also use those. There are some advantages to using them, especially if you're going to be holding positions till much later in the session after lunch and going into the 2 p.m. to 4 p.m. end of the session. However, for morning trades, the 0 DTEs will perform just as well as the 1 DTEs. Okay, so on the 9:30 a.m. Candle close, which closes on this chart at, since it's a 2-minute chart, at 9:32 a.m., the ask on the candle close is $22.60. So that means that each call option is going to cost $2,260. Now, for those of you wondering, can you also use this indicator on the SPX mini index, which is the XSP symbol? Yes, you can. We're not going to show that today. We did show that in yesterday's video. So if you'd like to see that, you can go to yesterday's video and look at that. And the SPX mini index, the XSP, trades at 1/10 the value of the regular SPX index. So consequently, the options are approximately 1/10 the cost. So you can trade 10 XSP options for approximately the same price as one regular SPX option. Okay, so with this indicator, as we've gone over in other videos, there are two different types of trades that you can do. One is a scalp only trade. With a scalp only trade, you're looking for a one level move in your favor that is computed by the level that you're basing the trade from. Looking in the direction of the trade, in this case it's up, one full level up is R1. So R1 is your scalp only exit. And here at the 10:52 a.m. candle close, it not only hits R1, but also hits the PMH level, which is the SPX pre-market high. On scalp only trades, there are no stop loss adjustments. You are simply exiting the trade. It doesn't matter if you have one contract, two contracts, three contracts, 5, 10, 20, or what have you. So whatever amount of contracts you have, on a scalp only move, you're looking for just a quick in and out. And in this case, the scalp in this particular session provided $1,520 profit per call option, as the bid on the candle close of this 10:52 a.m. candle is $37.80. Now, the second type of trade that you can do with this indicator is called a regular trade with the daily key level strategy. So with the daily key level strategy using this indicator on a regular trade, the regular trade, you're looking for a minimum 1.5 level move in your favor for either exiting the trade 100% or exercising one of several other options that you have with a regular trade as opposed to a scalp. One of those options is holding your entire position and just, no matter how many contracts you have, and adjusting your stop loss to the price that you paid for your initial entry. So the initial entry stop loss is level based on one of these two levels, the tight or the standard stop loss. However, on a regular trade, when you reach the minimum 1.5 level move in your favor, if you're going to be adjusting any of the contracts on the stop loss, then you are instead changing your stop loss to a cost of the option based adjustment. And so in that case, if you're just moving it to break even, then you would change your stop loss to, instead of a level-based stop loss, to now a price-based stop loss, where now your stop loss will be $22.60 if you're just moving it to break even. The subsection under that particular one is that you can also keep all of your options, and instead of moving your stop loss to break even, you can add a small profit buffer, which is generally somewhere in the 10 to 15% range. So for example, if the cost of the option is $22.60, you could add $2.20, and that would make it, in this case, $24.80. So if you wanted to do that instead of just break even, then here, when it hits this, if you're going to keep all your options, then you would adjust your stop loss to $24.80 if you wanted to add, say, a 10% minimal profit buffer on top of break even. Then what you're looking for after that is you're then looking for the price to continue moving in your favor, and then at each additional key level in your favor, which is defined after the 1.5 level move in your favor as either a main key level, one of these contextual levels, which in this case would not apply on this particular trade because all of them are beneath the 1.5 level move, or any midpoint that occurs after. So for example, if we turn on mid R2, R3, and mid R3, R4 here, if price moves up to R2, then that's your additional waypoint for another decision as to whether you want to exit some of your remaining position or further adjust your stop loss by adding some additional profit buffer. And then as it hits the next midpoint level, you would do the same thing. You would either decide to exit some or all of your remaining position, or further adjust your stop loss on any remaining position by adding additional profit buffer. The other alternative is only going to apply if you're trading multiple contracts of 3 or more. So if you bought 3 or more call options down here at the entry, then this would apply at the minimum 1.5 level move in your favor threshold on a regular trade. And that is to exit 60 to 90% of your original position at this 1.5 level move in your favor. And then you're closing those out and securing the profit on those. Then you are adjusting your stop loss to break even, or break even plus the initial small profit buffer on the remaining portion of your original position, which is known as the remaining runners. Then the idea is basically the same on the remaining runners. You've now de-risked the trade because you've taken off the majority of the profit at this 1.5 level move in your favor. Then you are looking to manage your remaining runners level to level as price continues to move, if it continues to move, to other key levels past the 1.5 level threshold in your favor. And then at each one of these different spots, then you can decide to either keep all the remaining runners and look to the next level if it hits it before doing anything else, by simply either adjusting your stop loss further in your favor, or you can take off some of the remaining runners at each level and then adjust if you want by adding additional profit buffer to any remaining portion of your position. And then finally, you're getting down to where you just have one option contract left, and then as it continues to move in your favor, if it continues to move in your favor, then eventually closing out that final runner. Okay, so in this case, on this 11:56 a.m. candle close, on this 1.5 level move in your favor, the bid is $45.80, so that is a profit of $2,320 per call option. Okay, so that's going to wrap it up for today's video. If you do have an interest in purchasing the SPX Daily Key Levels Indicator, as we stated earlier in the video, you might want to take a look at some of the longer SPX session videos in which we go over more details about the indicator and all of the features that is found in the new features video for that. So the links for all those are in the description of this video. Also, if you do have an interest in purchasing this indicator, you can send us an email at daytradinggps@gmail.com to request a discount promo code in return for you taking your time to watch for watching this video today. So just simply send us an email at daytradinggps@gmail.com to request a discount promo code, and we will send you one that will give you a substantial discount on your purchase of this indicator. This indicator also comes with a very comprehensive, detailed user guide and manual, which you can utilize, as well as our library of SPX videos that we have. Some of those are the public videos. We also have private videos on this channel, which are only for people who have bought the indicator, and those are for training purposes as to how to utilize the indicator. Okay, so some of you may also be wondering, how is this indicator working for people who have bought it? So now we'd like to show you some of the feedback and user reviews that we've received from people who have bought our daily key levels indicators and are using them on a daily basis. Thank you again for taking your time for watching this video today and supporting our channel. Okay, so for those of you who might be wondering, well, how is this working for people that have purchased the daily key levels indicators? You can go to daytradinggps.com and look at the user reviews and feedback. We've just taken some of them here and highlighted parts of them, but we invite you to go to daytradinggps.com and look at the reviews and trader feedback on our various daily key levels indicators, including the SPX daily key levels indicator. Thank you.